Aura Property Group, guiding you home.
Considering the difference in the effective rate at which capital gains tax is payable, is it better to purchase property in one's personal name or in a business or in a CC or trust?
Well, this is unfortunately not a straightforward answer, and it will mostly depend on the circumstances of the purchaser and I suppose also the purpose for which the property is being purchased. It's not really a question that one can answer without having a proper understanding of the advantages and disadvantages of owning property in each capacity. Now, in my opinion, residential property should, as a general rule, not really be bought in a company or a CC, and this is mainly because of the many disadvantages to that type of ownership from a tax perspective. Now, in case of a company or CC, for example, capital gains tax is paid at a rather high effective rate of 22.4%. In addition to that, members or shareholders will also be liable for dividends tax at a rate of 20% on any dividends or distributions of the proceeds of the sale that's made to the shareholders or the members. The company or the CC will also not qualify for that 2 million rand primary exemption, a primary residence exemption, and it will also not qualify for the individual capital gains tax exclusion of 40,000 rand per annum per person. So when you think about it, there's a lot of tax benefits really that are lost that an individual would be entitled to if you own property in a company or a CC. In case of a trust, capital gains tax is paid at a rate of 32.8% on the gain of any on the capital gain of property, and again, the members of the trust or the beneficiaries of the trust as such won't qualify for the primary residence exemption, and also no annual individual capital gains tax exclusion. However, in case of a trust, when the proceeds of the sale is distributed to the beneficiaries of the trust, then that profit will be taxed on the individual's individual capital gains tax rate, which is again much lower than the trust's capital gains tax rate. Now, also important to know, when the proceeds of a sale is distributed to the beneficiaries of a trust, no dividends tax, for example, is payable. So a slightly better position already than when owning property in a company or a CC. Now, my general advice would be that one needs to look at, I suppose, the purpose for which the property is being purchased. And in my opinion, if it's the primary residence and that's the sole purpose that you are purchasing the property for, then it's probably advisable to purchase the property in your individual capacity, because then you qualify for the primary residence exemption of 2 million rand, as well as your annual individual capital gains tax exclusion. However, if it's an additional property that you're purchasing and the purpose of the purchase is to keep the property and build up your assets, then it's probably better to buy that property in a properly structured trust that makes provision for the distribution of the, once the property is sold, that makes provision for the proceeds of the sale to be distributed to the beneficiaries so that it can be taxed at the individual rate. The reason for that is one has to also keep in mind estate duty, which is charged at or payable at a rate of 20% on the value over and above 3.5 million. So, in other words, if your estate is worth more than 3.5 million, then you would be liable for estate duty at 20% of that value. So, if you are buying properties and your intention is to keep that properties, then it's probably better to buy additional properties that you don't use as your primary residence, to buy that in a properly structured trust.
Aura Property Group, guiding you home.